Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So I was just doing a little bit of research to find out what's going on with the Nvidia moving forward, because they are reporting this week alongside with Salesforce. Both companies are reporting after the close on Wednesday, and I was just looking and thinking, okay, I just need to know what to expect moving forward, because I do own both companies in this portfolio. So in this one, I'm only going to talk about Nvidia, and maybe I'll do Salesforce as well before Wednesday as well. We can have a quick look to see what to expect. But let's talk about Nvidia. Nvidia is one of the newest companies in my portfolio. It's been there for maybe about 2 months since basically the massive drop. I just bought about I can't remember how many shares. I'll share that with you at the end of the video. By the way, if you haven't joined us on the Patreon account, please do so. It really genuinely helps the channel. You can get access to the family portfolio, all the buys and sells that I regularly make within this portfolio. On top of that, there are other things that I like to post. I haven't actually been as active as I would have loved, but yes, I am still posting regularly as much as I can. And it genuinely helps this basically support the channel, because there is a lot of subscriptions I pay for, so I use that money to pay off on any of these things. So yeah, if you can join us, that would be absolutely amazing. Now let's talk about Nvidia. For the 1 year, it's up 26%. For year to date is down just about over basically less than 2%, and about 3.5% for in the last 6 months. But check this out, for the 1 month, it's up 27%, which is absolutely crazy. The highest stock price has been $153 per share. The lowest was 86, and I think that was around the time where, Donald Trump basically announced all the madness about terrorism and so on. It went down quite a lot. That's the time I bought it. I'll show you exactly how much I'm up and down. Now, one thing I want to talk about first is the earnings expectation. So there's a lot of analysts that cover. So there's no shortage of coverage for this company. And just looking for basically what to expect for Q1 of 2025, I think it is. It's basically same as usual. Okay, to top estimates for the first quarter, but guidance also to be roughly in line with what they've said before. It will be interesting to see if they say anything about China, if they talk about any of the tariff situations. And of course, the CEO has been traveling with Donald Trump wherever they went. When he was in Saudi Arabia, he was there. He was basically talking about Donald Trump was talking about him and so on. So I think they are sort of expected to relatively, do well in terms of the tariff side of things. And as you can see here, the consensus analysts expect basically Nvidia to earn about $73 per share, or $43.18 billion for this quarter. And if we go back here, I can show you in a little bit more detail. So if you click the earnings side of things and scroll down, you'll see here that's basically what we're expecting, and that's in terms of revenue expectations for this quarter. Now, if we click estimates, for example, they might not give us the guidance. I don't know, we'll see what happens anyway. For the annualized, where you can see here, they're expecting basically in 2026, okay, they're expecting 38%. By January 2026, basically 38% earnings to grow about that much. January 2027, 36%, 14%, and then a slight decline in January 2029. Now, of course, only if we normally focus for the first three, so that's the ones that we're looking at today. And in terms of revenue side of things, you can see 52% expected to basically earnings to grow year over year by January 2026, and then 23%, almost 24% in January 2027, 16% after that. So if we look at quarterly, so again, when it comes to the next 3 years, there's nothing to worry about. And quarterly, this is what we're expecting. So about 19% for this quarter that they've reported, and then 2020. So the next quarter, so physical year Q2, for example, we're looking at about 46, let's call it 46%, 40% after that, 44%, again 77%. So every single basically quarter, they are expecting their earnings to grow, which is really good. And moving forward, it makes me happy to, as a shareholder, to see basically companies doing that well. And when it comes to revenue, it's also growing from $43 billion to, let's say, basically by the end of this year, about $56 billion. That can easily change. And some of the products that they have, like the Blackwell, for example, chips, the per unit, I think they sell it for about 30 to 40,000 per unit. So they're not cheap at all. So if there's more demand for their chips, of course we will see more of that revenue growth. Now, talking about revenue growth, let's talk about the financial side of the company. So we know the earnings and what to expect. Let's see what they report. But it seems undervalued according to dividend, the valuation from Simply Safe Dividend. So, but when it comes to dividend, this company does not give dividends at all. They might as well cut it, just stop it giving out, because that's ridiculous. 89% of safety, AA minus, very strong when it comes to credit rating. $3.2 trillion company, absolutely huge. And payout ratio very, very low. Increases has been good over the last whatever years, and 1 year basically of increasing that, you barely get any dividends for this company. But when it comes to the last 5 years, as you can see, that dotted line is below that blue line here, so that means it's kind of sort of undervalued. The bit I'm really interested is this bit here, especially the earnings per share, as you can see here, from where it was in 2016 to where it is right now. And this is why a lot of people are paying so much for this company. The hype about this company is basically the fact that they have a basic product and not many companies have yet. Okay, they might get caught up basically by the next couple of years, but right now they are the market leader when it comes to that. So it is very important to remember that. And also this massive growth, I don't know how long that's going to continue, but based on what we've just seen, the earnings expectations, okay, we're not expecting that to slow down anytime soon, which is really nice to know, right? Free cash flow per share is also been heading the right direction. Shares outstanding has declined slightly. Total sales, or the revenue side of it, from $5 billion to $130 billion in the next 12 months. That's basically in the last 10 years, which is absolutely ridiculous. Okay, and of course that because of that, it's actually trading in higher multiples, but we will see if it's actually a buy right now. Return on equity, we're looking at 119%. Return on invested capital of 71%. Operating margins on 62%, free cash flow margin of 47%. I've always owned this company over a period of, I don't know, for the last 4 years, but I traded in and out of it, and this is probably one of the mistakes that I've made. I've had it in the family portfolio, sold it. I've had it in this portfolio actually, and I've sold it a long time ago. So I traded in and out of the company. But now what we're going to do is just see if it's the valuation. Okay, we know it's a great company. Everything seems perfect in terms of all financials. Okay, but we would like to see, and this is, by the way, this is why I was really basically surprised with it, right? From the 5 billion that we've seen to the 130 we've seen, look how much basically they taken home, or maybe the gross profit. Look at that, 97, almost a $98 billion of that 130 is gross profit. And then of course they're spending a lot of money. Okay, a lot of money in terms of sales and general, basically selling, generals and administrations, research and development, other operating expenses. That is quite a lot. But then of course the net income is what we're normally looking for, and that's almost $73 billion of net income, which is absolutely crazy. What's their free cash flow right now? Let's go into the free cash flow here. I want to see what their current free cash flow looks like. Look at that. $44 billion of free cash flow. Apple has got like about 100 billion, I think, but this company is up there with them. Now, in terms of valuation side of things, Refinitiv is basically saying it's about 24% upside from here. $163 per share is where they think the price should be. 131 it is where it is now. Now, tip ranks is basically similar to basically they actually look at basically analyst. All these are the types, basically all the analysts that are basically talking about this company, what their price targets are, and they average it out. And then as you can see, we got strong buys, we got 34 buys, 5 holds, 1 sell, $164 per share, 25% upside from where we are. If we go back here, Seek Alpha as well will probably be more or less the same. 41 strong buys, 12 buys, 8 holds, 1 strong sell. And if you scroll down here, you will see 23% upside from where we are. $162 per share is where they think the price should be. This one is 164, so very, very similar. Now, if we click Morningstar, it's $125 per share. Slightly basically lower than where basically they think the price should be, but it's still fairly valued. The final one I want to use is the fast graph, just to show you exactly where the company has been over the last whatever years, and then take it from there, because it is important to see where the company has been. And as you can see here, this basically that one of the things that we're interested in is basically the price, which is that line here, that black line. We want it to be below the orange line if possible. That means under valuation. So if we just focus on the last 15 years, you can see there's times basically where that was below, the price has been slightly lower than the earnings, basically the operating earnings side of things. And as you can see here, it's gone over too expensive. But why is it becoming too expensive? It's becoming because of this growth expectations. That orange line is basically all of a sudden a mountain. Is just going up and up and up so because the expectation is the company is expected to grow 47% when it comes to operating earnings growth rate, right, of 46%. Of course, the price is sort of followed that. But we've got a great opportunity because of what is happening with the tariffs things, okay, that has just given us an opportunity now with where the stock has come down. Now, if we're using the forecast, so we know where the company has been, even if we reduce this the last 5 years, you can see that the price is actually below that orange line. And now if we look at the forecast, it's based on the expectations, so the estimates, and remember these estimates for 2025 is 130%, basically when it comes to EPS, 46%, 28%, 13% in 2028. Okay, so that's basically estimates basically that has been given, and you can see basically whether they estimated up or down. You can see that the changes that has been made over the last 1 month. So if we're using this, right, and the basic fair value PE ratio for this company is 26, which is that line there, that will give us about 9% total annualized rate of return, which is quite good. And of that period of time, basically between now and 2028, we will get about 26% total rate of return, which is really good, including dividends. So if you invested 10,000 in this company, you'll be making about 12,600 basically by the end of January 31st of January 2028. Now, if we use the normal multiple for this company, so where it has been trading, which is basically that 48 PE there, that normal PE ratio the company has been trading with earnings growth rate of 26%, okay, you will be making total annualized rate of return of 37%, and the total basically 136% from where we are right now. So your 10,000 in that basically period of time will become, if this happens, by the way, so if we get that 26 earnings growth rate that basically we're expecting, okay, and based on this here, what the analysts have said, right, we will be, our 10,000 investment will become 26,700 US dollars, including that very, very small dividend. So it is absolutely amazing to see a company like this trading right now below sort of intrinsic value, and I genuinely like this site. Okay, now what I'm going to show you now is my shares. So that's basically where the company is. That's all in the information I want to share with you guys. You can see here I've got 1.27 shares percent of my entire portfolio, or basically in Nvidia. 22%, almost $262 per basic pounds in gains. And if you see this, I've got 15 shares right now, 1,458 pounds, okay, and gains is about basically, let's call it about 22%. So my average is $102 share, let's call it $103 per share, or 80 pounds. So if it comes back, and it can potentially come back after the earnings, because it can easily drop 10-15% on one single day. Is very, very volatile stock. Don't get me twisted, and it's not a company you want to own. I don't know if you like me and you basically don't like taking huge risks, okay, it's better to own maybe about 3% maximum of your portfolio Nvidia. That's why it's only 1% and something right now, but I'm going to build that hopefully to at least the 3% in the long run. And if it grows and it becomes another basically Broadcom for me, and it basically becomes huge, I'll probably trim it here and there. But for now, I will love to buy more of this. but it has to come back down to my price because I'm not chasing this. It's gone up so far, I'm just gonna leave it alone. If it goes up another 10-15%, I might just sell it, and it becomes overvalued, of course, I might just sell it or just leave it for now, and so on, because I traded this company in and out and it worked for me in the for quite some time. It can happen again, it might not happen, but for now it's a long-term hold. But I would love to see it come back down to at least $100 per share, so maybe then I can add another $15 per share, another 15 shares or so. And the reason I said that is because of this massive growth that we're expecting for this company in the next whatever 3 to 4 5 years. Those double digits is what I'm after, and if I can hold this for a long term, hopefully it will be one of those similar to maybe Broadcom, because when I started Broadcom it was actually so undervalued, and right now over 350% up. Okay, and I have been trimming the company, but it still is one of my basically biggest gains that I've ever had in this portfolio. So anyway, that's the one what I wanted to share with you guys today. If you are enjoying the content, please don't forget to join us in the Patreon account, like the video, subscribe to the channel, share with your family and friends, and tell them what we're doing here. Inshallah, we're trying to build portfolios of Sharia compliant stocks, inshallah, in the long run, that we can hold for a very, very long time, inshallah. Anyway, take care. Assalamu Alaikum.